Good evening, class, and welcome to our performance management class this evening. The last time we had our class session, I gave an assignment, and I don't know if we can recall the assignment I gave. In a moment, I'm going to get the assignment so that it will refresh our memory on what we are expected to do. Okay? All right, so this is part of the assignment. Okay, I gave us an assignment on November 2017. I think the assignments were two. So let's look at the November 2017 question number 2. And we also have May 2017 question number 3. So which one are we going to take first? Okay. All right. I will do the May 2017 first because this is the one that looks very simple for almost everyone who submitted. Then we will now go to November 2017 question 2 and we will now look at it. All right, look at the question. Tadex Nigeria Limited is an engineering company that specializes in building engines for grinding machines. One of the components of for building these engines is sourced from Toka Nigeria Limited. Okay, now we have two companies here, Tadex and Toka. And we are told that Toka is a company in the same group with Tadex. Each component is transferred to Tadex, taking account of Toka's opportunity cost of the component. The variable cost of Toka is 280 per component. A prospective customer has approached Tadex to submit a quotation for a contract to build a new engine. This is a new customer to Tadex, but directors of Tadex are keen on winning this contract as they believe that this may lead to more contracts in the future. As a result of this, they intend pricing the contract using relevant costs. The following cost data is given in respect of the contract. Now, this is where the whole thing lies. I'm going to skip this reading for now and go straight to the requirement. The requirement says here, we are going to take the first part, calculate the relevant cost of building the engine, that's one, and explain why you have included or excluded any cost in your calculation. Now, this is what we are going to base on. So now let's go now to our solution. Okay, this is from May 2017, right? Correct. So May 2017, question number what? Question number 3. Question number 3. This is from ICANN. Okay. Now, what are we asked to do? the relevant cost of building the machine. This is related to TADEX, now not TOCA. So we'll come here and say TADEX Nigeria Limited. Relevant costs of building a new machine. So we are looking at the relevant costs. So we are going to be looking at the costs and we are going to be putting the reasons. So we'll say here, this is cost item. This is cost item. This is workings. This is costs. And this is reason. So these are the things we are going to be doing here. So the cost should have a Naira sign here, and there's a reason. So let's take these costs one after the other. We come here and say the production director of TADEX. So cost item here now is production director is on an annual salary. So is the production director's salary that we want to write. So we'll come down here. The cost item is production director's salary. Okay. So what happens to that? How much is it? This is 15,000 naira per 8-hour day. Now you will be tempted to go and calculate 15,000 times 8 hour. But let me tell you here now, the production director is not a frontline production staff. And so he's not going to be involved in the making of the machine. His cost is already guaranteed. And as such, it is not relevant to this situation. So I will put the cost here is 0. Reason, production director's salary is fixed and does not affect the project. That is spelling of project does not affect the project. All right, so that's one. The next cost we are taking is the materials. That's fine now. Materials needed for the contract are, we have material A. So let's talk about material A. So we'll go down now and treat material A. So material A. So what are the questions we are going to be asking? The first question we are going to ask is, what are they required? 110 square meters. This is what is required. So I'll come here, I'll say, let me go here and say workings 1. I'll do it in workings 1. Let me go down here and do my workings. Workings 1. Material A. Required. Required is 110 square meters. That is, this is how square meters is. Square meters. Okay, that is what is required. The material, we ask the first question, is the material available in stock? Let's see. This material is normally being used by Tadex and it has 200 square meters in stock. So yes, the material is available in stock. We don't need to buy any one. We move to the next question. Now the second question is, if the material is available in stock, is it in constant use by the company? Now let's see the answer. This material is normally being used by Tadex. So yes, it is normally being used by the company. They already have all that they needed for the project. They require 110. In the store, we have 200. If we take 110 out of it, what do you need to do? Because it is being used normally, you must replace it. And so replacement cost is relevant. I will come here and I will put that the 110 square meters will be replaced after use. Now, how much are we going to replace it with? Now, look at it. This we are bought at a cost of 120 per square meter. Is it relevant? No, because this is historical cost. It's past. They have a resale value of 105 naira per square meter. Is this relevant? Yes, because if we don't use it, we can sell it for 105. But are we going to sell it? No, we are going to use it. And so the replacement cost of 125 per square meter is relevant. So we are going to say 125. The relevant cost, the relevant cost is 125. So what do we do now? We will say 110 times 125, which will give me what? 110 multiplied by 25, that will give me 2,750. 2,750. Okay, so this is the relevant cost per square meter for the whole of the whole materials that is being used. Someone says 13,750. Okay, maybe my calculator is, oh, I went to put 25, sorry. 110 times 125, 13,750. Thank you so much. 13,750. Sometimes your calculator may put you in problem, so you need to know what you are writing. 13,750. Now after doing that, I'm going to go here and put 13,750. Reason, replacement cost relevant. So here, this is not relevant. Replacement cost here is relevant. The next thing again now is material B. Material B. We'll now go down and write material B. Material B. We'll look at workings number 2. So let's go down to workings number 2. material D. And I will say required. How much is required? 30 liters is required. And I will say 30 liters. LTROS. 30 liters is required. Now, available. Available. How many is available here? This material has to be purchased specially for this contract. So, none is available. None is available. Just write none. So, the first question we asked, is this material available in stock? No, it is not available. So what do we mean? What do we need? It means that purchase purchase of the material is relevant. So we are going to purchase this cost and these materials. So how much is the purchase cost? How much is the purchase cost? Let's see. They said this material has to be purchased specially for this contract. And the minimum, now look at minimum order quantity from this supplier is 40 liters. Now, you have need for 30. You have need for 30, but you must buy 40 as the minimum at 90 naira. So you come here and say 40 liters times 90 naira. 9 times 4, 36. So that will give me 3,600. So 3,600 is relevant. So I'll say 3,600. We'll now say purchase cost relevant. Now the next one is, they say Tadex has no need use for this material after the contract is executed. So it means that they must use it for the contract. So they have to buy it, use it for this contract. If they don't use it for this contract, then everything is a waste. Now, they said 60 components will be purchased. So that means that component is another cost that we need to consider. Component. Component. So let's go to workings 3. And we'll say 3 component costs. They said 60 will need to be purchased at how much? At a price of 500 naira per component. Times 500. 5 times 6 is 30. It's going to be 30,000. So this is purchase price, or say purchase cost. Anyone? So this is 30,000. We take it up there and we'll put our 30,000. Call it purchase cost relevant. The next one a total of 240 direct labor hours. So we will not say labor hours or labor. Say labor labor. Let's look at workings number 4. Go down. Workings number 4 is labor. Required hours. Required hours is how much? How many? 240 direct labor hours will be required. So we have 240 hours. So what do we need to say? Is this labor force, are they already in permanent employment? Let's see. The current wage rate for the grade labor that will work on the contract is 110 naira per hour. That currently has 75 direct labor hours of spare capacity. They have spare capacity of 75. Now, what it means here is they already have some people available to do the work. Some of them could use their spare time to do this job, and they have 75 hours to spare. And you remember, the, the spare capacity has no value. The spare capacity, you don't pay those people with spare capacity. All right? So that means that the required hours, the available hours, this require 240. Available, they have 75. Or we say available as permanent staff, 75 hours. So we need additional workforce. We now open a bracket. We have 240 hours needed minus 75 that is spare. That will give me how much? 240 minus 75, and gives me 165. So this 165 hours is what we need in addition to that 75. So we are sourcing for 165 hours. So what do? We are supposed to be paying them 110 naira per hour. Now, additional hours will be sourced either by overtime, either we do overtime at 140 naira per hour, engage staff 20 per hour. Temporary staff, because they are not experienced, will require 10 hours of supervision, who will be paid an overtime at the rate of 180 per hour. Now, let us see which one of them is going to be cheaper. It's going to be cheaper. So the first one, we can consider overtime. Overtime will be 165 hours times how much? 140 naira per hour. So times 140 naira per hour. That is, give me what? 165 times 140 will give me 23,100. 23,100. That is the overtime for that job. Of course, what about if we hire temporary staff? Temporary staff, let's underline this first. Temporary staff, we will need 165 multiplied by how much? 120 naira. 120 naira. That will give me how much? 165 times 120. That will give me 19,800. 19,800 plus supervision. Supervision, we are told that because these people are not skilled, they will need 10 hours supervision at the rate of 180 per hour. So I will simply say 10 times 180, that will give me 1,800. So now, if I add 19,800 plus 1,800, what would that give me? 19,800 plus 1,800 will give me 21,600. 21,600. So if you are the company, what should you do? Would you allow them to do overtime and you pay 23,100? Or will you go and bring temporary staff and give them 10 hours supervision and spend lower 21,600? So this is the relevant cost. So 21,600, you will say 21,600, you now say temporary staff and supervision relevant. Okay, so that's labor. The next one now is machine hours. So machine hours. So I will come here. Machine hours. So this is number 5. So let's deal with machine hours. 25 hours will be required. So we'll go to 25 hours will be required. We go to workings 5. I will say number 5. Machine hours costs. Required is 25 hours. Okay, the machine is already being used for leasing at a weekly lease of 6,000 naira. It has 40 hours per week capacity. So 25 hours will be required. The machine has 40 hours week capacity already. So it means 40 hours is available. 40 hours available. Is it really available? The machine is already being leased. The machine has sufficient capacity to complete the contract. So the machine has sufficient capacity to complete the contract. Now, what it means here is the machine is already being leased. So that 40 hours, if we take away 25 out of it, 15 hours will be remaining. That leasing of 6,000 naira is already being used for about 15 hours or less. That's why they said the machine has sufficient available capacity to complete the contract, meaning that for the 40 hours per week, the machine can only be leased for about 15 hours max. So the 25 hours required can be gotten from it. So what do you think? Just like labor hours is already being employed. So the 25 hours is inside there, and if you decide not to do the project, your leasing will still go on. That's not an opportunity cost. If you decide not to do the project, your leasing will go on. If you do the project, your leasing will go on. So the machine hours is not relevant because it has spare capacity. So we now say spare capacity exists for the machine and it will not affect the leasing whether the project whether the project is carried out or not. Relevant cost is nil. So here I'm going to put another zero here. Spare capacity available, not relevant. Okay, so the next one here is the variable cost of running the machine. Now the variable cost of running the machine. So let's go now. Variable cost, machine variable cost. So let's look at workings number 6. And I would say number 6 is here. Machines variable costs. All right. So, despite the fact that you have spare capacity to do the job, the machine hours itself is sufficient whether you are hiring it for another leasing or not. And we said it was not relevant. The machine hours, take note, is not relevant. But the usage of the machine is relevant. You will not incur that running cost of using the machine if you don't use it. So the machine cost is relevant. So I will write here, if we don't use the machine, we won't incur running costs. Therefore, the cost of, how much is the running cost? 70 naira per hour is relevant. Cost of 70 naira hour is relevant. So now you say 70 naira. How many hours are we using it? For 25 hours. So let's calculate 70 times 25. That would give me 1,750. 1,750. I take it up. 1,750. 1,750. Running cost relevant. Then the next one here is fixed overhead absorbed. Fixed overhead absorbed. Fixed overhead absorbed. There's no need to do workings here. We are told that it is 200 naira per direct labor hour. We know that fixed overhead is not relevant. Fixed overhead not relevant. So I'm going to put a 0 here. So it means we have how many zeros here? We have about 3 zeros here. So now let's calculate the total relevant costs. So always do your workings on a fresh sheet of paper, just the way I did mine. So you say total relevant costs. So now let's do the calculation. I already have 1,750, so I will go up now, plus 21,600 plus 30,000 plus 3,600 plus 13,750. That will give me 70,700. So 70,700. This is your relevant cost. So if your answer that you submitted, those who submitted the assignment, if you got 70,700, you are correct. You are correct. So that's the solution to this question. And we will not talk about the B part of the question because you already have the past question with you. You can look at those factors that will be considered. Okay, for the sake of it, let's go and see the B part. Let's read it and understand why. So you see here we got the same thing like they did. Okay, 70,700. All right, explaining why the cost is excluded. Talked about all this, so this is your explanation. Let's go straight to the other question. All right, look at it here. If standard costs are used instead of actual costs, then the problem is solved provided the standard that is used is fair to both the supplier and the buyer. Now, firstly, it is important that both the supplier and the buyer agree on the standard cost for the item as being a fair standard. This may be difficult to achieve without the intervention of head office, as it may be affected by negotiating skills of the managers of the respective responsibility centers. Now we'll go to transfer pricing, and that you understand this. Secondly, there is the need to review the standard in the light of changing conditions that are beyond the control of the supplier. It will not be fair for the transfer price to be based on an out of date standard if the reason it has become out of date is outside the control of the supplier. This will require a renegotiation of the standard. You will understand this when we go to variance analysis, advanced variance. The use of the example given and assuming that the standard cost of the item is 200 means that initially the supplier was achieving the standard cost and there will be no change in the transfer price. If the supplier was to become inefficient, the transfer price will remain 250 and so on. The supplier's profit reduces to 10 naira. Conversely, if the supplier was to become more efficient and produce the item for 180 naira, then his profit will be reduced to 70 naira. This will seem to solve the problem identified in number 1 above, as it encourages the supplier to be efficient. Now you will understand this when you are doing transfer price. Now if you look at this question, it tests the candidate's understanding of relevant costing. So that's the main thing it is testing you, and candidates' understanding of the concept and requirement of the question was average. We don't want to have knowledge to be average, as over 50% attempted it, but the pass rate was about 40. So 50% attempted it, 40% out of the 50 pass. So it is about 20% that passed this question. Now they say the commonest pitfall was candidates' poor understanding of factors that needed to be taken into consideration in determining opportunity cost. Now you see, candidates need to prepare better for future examination using ICANN study text and other relevant texts. So that's why most times we refer to your ICANN study pack, your ICANN Pathfinder, because they are relevant study guide. Okay, we've done with the first part of the question. Now for the next 1 hour, let's look at the second part of the question. The second question here, this is November 2017. So let's go down now to a fresh page. This is ICANN past question, November 2017, question number 3. Is it number 3? Oh, it's number 2. Question number 2. Question number 2. All right. This thing is too big. I want to be efficient. All right, so let's look at this question. Roda Limited operates 2 departments to produce its unique products. The K brand is produced in one department and the T label is produced in the other. The 2 departments are referred to as E and P. So what it means here is the K brand, okay, say K is in department E and T is in department P. Now, in recent years, the demand for the K brand has been falling, and the firm has made the decision to what? Shut down. Shut down. So this is a shut down decision. So we are having a sneak peek on shut down decisions here. They are going to shut down department E because of the K brand falling. However, the timing of the closure is yet to be agreed. A budget for Department E for the year ended 30th June 2017 has been prepared as follows. Now look at the budget, we have direct costs. All these are direct costs. And we see the total cost. Now this is the total cost in thousands of naira. Now, this is the total cost here. We have the overheads, variable and fixed. Everything here is 28 million. Now, if you look at the output per case, this is the number of requirements per case. Per case. All right. So, the sales revenue, they sold 100,000 cases. So it means that this budget, this budget is for 1,000 cases. So this budget is a budget for 100,000 cases. Okay, so that is the budget. Now, the loss that they made here is 33 million. All right, so this is the budget. Now, in budget, you need to know that there is something called fixed budget. There is something called flexible budget. Now, the managing director of Roda Limited suggests that as the budget indicates, Department E would be in the loss-making position. Now, it made a loss of 3 million, that Department E would be in the loss-making position next year. It should be closed down. It should be closed down immediately. Now, who is thinking about this? This is the managing director. Now let's listen to the accountant. The firm's accountant says that he thinks that a flexible budget should be drawn up, showing the contribution of this department. So the contribution is important to this department, to the fixed overhead and profits before a decision is finally made. So he arranged for a budget, a flexible budget to be based on 80,000, 100,000, and 120,000 cases. So what it now means is this: if I ask you to make a flexible budget, let's say you were preparing for a party of 100 people. That is what you had in mind. And I tell you that, okay, assuming that we are not going to have 100 people, but 80, how will you adjust your budget? Okay, you now said, okay, if it's not 80 now, if it is 120 that we are having as our guests, how will you adjust your budget? That is how this question is looking like. We have a budget for 1,000 cases. We have to flex them in such a way that it will accommodate 80 and 120. That's a flex budget. I'm going to teach you how to create a flexible budget And flexible budget works well with variable cost. Now they said the letter being the maximum, which is 100,000, 120,000 is the maximum that the department can produce. So it's as also good as saying they are making 3 budgets. One for 0 cases. If there is 0 cases, there will be no profit, there will be no loss. No problem. That is even out of the way, because that's what the managing director is saying. Let's not budget for it. Let's close it down. It's as good as saying 0 cases. But the accountant is saying it's possible that if we produce 80, some of the costs may come down. We may cut down some costs. But it's not sure about the fixed cost. It's possible we may make a loss. Let's do 20 cases below and 20 cases above. It's possible that if we sell 120, the maximum, we may make more profit to cover fixed costs, and it's possible we may make a profit. So let's put that to test. Now, this is the whole thing we have here. I'm not going to read this whole thing until when we start solving. Now, required, prepare the flexible budget required by the MD and state clearly any assumptions that you make. So the assumptions here will be based on relevant costing. You are preparing a budget, but it's based on relevant costing. So now let's do that. Let's do that now. We will follow this pattern, as it is. So let's go now. Flexible budgets. Budgets. So what we do now, we will set the budget quantity. At this far end here, we have, all right, cases. So this will be 120,000 cases. This should be 100,000 cases. And here will be 80,000 cases. All right. So we are going to be writing. So here will be workings. I'll put WK workings. Then we'll say here is direct cost. Direct cost. So this is direct cost. So let's list them out. Material C, material V, packaging material. Material C, material V, packaging material. Of course, this will have working. So this will be 1, this should be 2, this should be 3. The next one will be labor. This is labor. Let's go to the next one. Overheads. Variable overhead and fixed overhead. So I'll come here. Variable overhead. Variable overhead. Fixed overhead. Then we'll have our total costs. So we'll have total costs. Then the next thing we will have is sales revenue. Sales revenue. Sales revenue. And after sales revenue is budgeted profit or loss. So I'm going to say budgeted profit or loss. All right, so that's how we're going to arrange them. So this is our working page. This is your workings. Number one should be material C. Let's read about material C. Because we have been reading all these. Now let's go down there. Direct materials. Each case of the final product requires a kilogram of material C. So what it means here is one case, I'll write it down here. One case equals to 1 kilogram of material C. So, therefore, 80,000 cases is equal to what? 80,000 kg. 100,000 cases equals to 100,000 kg. 120,000 cases equals to what? 120,000 kg. All right, so let's look at it again. And we are told that there are 100,000 kilograms of C in stock. So, what is available? You can come here and say available 100,000 kg. Now, we'll say here we don't need additional, right? We don't need additional because we have 100,000. If we are to go for 80,000, we don't need additional. If we are to go for 100,000, we have enough. If we are to go for 120, we need 20,000 kg more. So now you're getting the whole thing now. Relevant costing is entering this now. Now, the material originally cost 5 million naira, but today it has no resale value. Now, it has no resale value. The original cost of the product was 5 million naira. That is past cost. We don't need it, is no value to us. But now when they say, but today, that's today means it's relevant. It has no resale value, meaning that if we are to, if we are not to use this material, if we are to use this if we don't use this material at all, it will be dumped. it will be thrown away. It will be dumped. That's what the question says. Unless this is used in the manufacture of product K next year, it will have to be disposed of at a cost of 100,000 to the firm for every 10,000 kilograms, which have to be dumped. Additional materials C can be obtained by importing it from abroad at a cost of 100 naira per kilogram. 100 naira per kilogram. So I will come here. Let's address this new purchase. I will say new purchase. New purchase is 100 naira per kilogram. We are going to be purchasing 20,000 kilogram times 100 naira times 100 naira. So 20,000 kilogram times 100 naira, that will give me 2 million. Now this 2 million belongs to 120k. Now we are also told that if we do not use the 100 kilogram, we have to dump them at a cost of 100,000 naira for every 10 kilogram. So what we are going to do now, we'll say dumping cost, dumping cost, which is relevant because if we don't use it, we will dump it. Dumping cost will be 100, is it 100,000? 100,000 per 10,000 kilogram. 100,000 per 10,000 kg. Therefore, 1 kg will be 100,000 divided by 10,000 kg, which is 10 naira per kg. Right? So, for 80,000 cases, which is equal to 80,000 kg times 10 naira, that will give me 800,000. Now that's going to be the opportunity cost. If we don't use this material, we are going to dump it. We are going to spend 800,000 for it as a dumping cost. For 100,000 cases, it's going to be 100,000 kg times 10 naira, which is how much? 1 million naira. So for 120,000 cases, we already have 100,000 kg. So we are still going to still use 100,000. We cannot use the one we bought new to come and dump it again. This is the existing one we had. This existing one is still going to give us 1 million. So now how do we arrange this now? I can come here. This is 80,000. This is 100,000. This is 120,000. So you say new purchase dash dash 2 million. Okay, then here you will say dumping costs. Okay, so the dumping cost, just just a moment. All right, I'm back. Now, dumping costs. Now, this is dumping cost saved because they are not going to dump it if we don't use it for this project. The 100,000 kilogram of material B, I mean material C in stock will be wasted. But now, because we have decided to use it, we are saving that dumping cost. We are saving that cost. We are not spending it. That is not something we are going to spend. We are going to use it and save us from that dumping cost. So that saving that cost is as good as a revenue to us. But because we are looking at it as cost, it is going to be a negative cost because we are not spending it, we are saving it. Those ones we are spending, we are using positive figures on them. Like this 2,000 naira is a purchase cost. It's a purchase cost. We are going to spend it. The ones we are not going to spend, but we are going to save, we are going to use a negative. So this is going to be 800,000. This is going to be 1 million. This is going to be 1 million. So when you add them up together, this will give me 800,000 negative. This will give me 1 million negative, and this will give me 1 million in positive. So that's workings one. We go up there and put them. Okay, I forgot to put a 3 naira sign. 3 naira sign. I can see people asking me question. Let's see what the question. Someone say I don't understand. Okay, now I am asking now. Let's say you have flour, and this flour you don't have any use for it. You don't have any use for this flour. Should I use flour? Okay, let's say you have a chemical. You don't have any use for that chemical, but now you now have a project where you will need to use that chemical. If you don't use that chemical for that project, you are going to throw away the chemical, because the chemical is kind of harmful. Maybe the project is maybe to use it to wash your clothes, a particular amount of clothes. Now that chemical is very harmful. You can only use it for that purpose. Now you have, let's say, 100 pieces of it at home. You now have a job that will require you to use that amount, that 100 that you're about to throw away. Now, what are the relevant costs? The cost of buying that chemical is not relevant, but the cost of throwing it away is going to be relevant. So, what it means here is this: if you don't use this, you are going to throw it away and you spend money. That's one. If you use it in this in this case now, you're not going to spend any money. You are going to save the cost of dumping or throwing it away. That's that amount you save. You didn't spend it. You just save yourself that expense. It's just like saying, okay, you wanted to go to a particular place, and somebody now called you. You have kept 1,000 naira as transport. You have budgeted that 1,000 naira as transport. It's as good as spent. If you don't, if you just have to go to that place. Then somebody now come and say, no, don't go to that place again. This is because the person is not at home. That 1,000 naira that you are supposed to have spent is saved. It is now like a revenue to you because it was as good as budgeted to be spent. The same thing here, you would have used this material C, you would have thrown it away if not for these particular cases. But now you are using it, you are saving yourself the dumping cost. So now, what I want to tell you is, each time you see a cost to be incurred for dumping, for disposal, take it as a revenue. Take it as a revenue if you don't dump it. That's what it means. Take it as a revenue if you don't dump it. But if you are considering it as a cost, take it as a negative cost, which is cost you save. That's the point here. So we've saved ourselves 100,000. We saved ourselves that 100,000, maybe 1 million. We saved ourselves this 1 million. We didn't throw it away. Yeah, we only saved ourselves 800,000. We have to do this. It means we'll still spend on 200,000. I mean, we'll still spend 200,000. But we saved 800. 200,000 we are going to save that we are going to spend is not relevant here. The 800 we are saving is relevant to this number of cases. And so that was what we are going to use here. Material C, we have, since it is three zeros, you can put 800, 1,000 to represent 1 million. Then here is 1,000. If you look at it here, we have three zeros up. So that's the same thing we are doing. So you see here that this is supposed to be 5 million as a cost. Now, in relevant cost, it has changed to a negative of 1 million. All right, so let's go. The stock of material V. So we are now in V. We now go down to do material V. We now say this is workings 2. material V. Okay, let's read and see what material V is telling us. The stock of material V will be sufficient to produce 120,000 cases. So what it means here is material V available in stock? Yes. Now they said what is available in stock can produce 120 cases, meaning that it can also produce 80, it can also produce what? 100,000 cases. However, this could also be used in the production of the standard product. Now, you know there is two kinds of products here. They have another product apart from this product. Okay, they have another product apart from this product. They said it's called a standard product, which requires the same amount of material V to produce one case as the K brand. So the number of cases, the number of material V that is required to produce one K brand is the same number of material V required to produce the standard product. The original cost of material V in stock was 500,000. This is not relevant. It now has a market value of 2,400,000. So this is 2,400,000. So 2,400,000 is the market value. Okay. So what we are asking is the material available in stock? Yes. If it is available in stock, the next question is it in constant use? Yes, because this can also be used in producing the standard product. If not in this product we are doing now, it can be used in the standard product. It means that if you take any of material V, you will need to replace them. You will need to replace them. So the market value is what we are going to use. So I will say this is 2,400. Say current market value equals to 2,400,000 sufficient for 120,000 cases. Therefore, we can say for one case, it will be 2,400,000 divided by 120,000 cases. So what would that be? 2,400,000 divided by 120,000. That will give me 20 naira per case, which is 20 naira per case. So we will now do something like this. This is 80,000. This is 100,000. This is 120,000. Material V at 20 naira per case. So 80 times 2 is 160. So This 1.6 million. This 100 times 20, that's 2,000, that's 2 million. And of course, this is going to be 2.4 million as we had before. It's going to be 2.4 million as we had before. So we'll take it up. 162 million, 2.4. So we'll say this is 16, 2,000, 2,400. Of course, 3 zeros up there. Now we have packaging material. Let's go down and write packaging material as workings number 3. Workings number 3 is packaging materials. So what do we know about that? Sufficient packaging material to pack 100,000 cases of K is in stock. So what it means is this. Is there packaging material in stock? Yes. But it can only cover for 80,000 and for 100,000. It cannot do what? Cover for 120,000. So we'll need to do what? To bring more. Then I said, as this has been overprinted with K product information, only half the value of this could be salvaged with the standard product. So now they said it has been overprinted with K information. Only half the value. Now the thing here is half the value could be salvaged. And they said there have been no price changes associated with packaging, and scrap cost will be negligible. So the first thing we'll do is, what is the packaging cost? Before we do that, we'll say enough package to satisfy 80,000 and 100,000 cases. New 20,000 cases. New 20,000 packaging material. Packaging material are required for 120,000 cases. So, let's say additional cost is 20,000 times, what is the cost per case? Packaging material per case of output, the cost is 30,000. Because if you multiply 30 times 100,000, it gives us this 3 million. So this is 30 naira per case, and they said no price changes has been associated. So this is times 30 naira. So 30, 3 times 2 is 6. 0 and 0, that is 600,000. So this is 600,000. Now to buy new cases for the 120 is 600,000. Now, they said because of the overprinting, half the value, half the value could be salvaged. Now, they said salvage cost is half times 30 naira, which is 15 naira. So now look at what we will do now. This is going to be 80,000. This is going to be 100,000. And this is going to be 120,000. New package at 30 naira. This is dash, dash. This is 600,000. Salvage of existing at 15 naira. So we can only do for 80. So 15 times 80,000. That is 1,200,000. It's going to give me 1,500,000. This should be 1,800,000. Let me see. 15 times 1,200,000. That's 15 times 1,200,000. Wow, this 18. Is it 1 million? No, I'm the one making the mistake. 15 times 120,000. 1,800,000. So you will add, and this gives me 1,200,000. This gives me 1,500,000. And this gives me 8 plus 6 is 14, 2,400,000. 121524. 1215 and 24. All right, and that's it. Then we come to, we have labor here, but it's as if they didn't talk about labor, so let's jump it. Variable overheads and machinery. Variable overhead. So let's go to variable overhead. So here, call this workings number 4. So we are jumping the labor. They said here, the machine used in department E is 10 years old. Okay, 10 years old. So what's the meaning of telling us that it is 10 years old? All right, it originally cost 10 million naira. That's the original cost. We don't need that. And it's currently being depreciated using the straight line method for over a 20-year period. Wow. What is the significance of this? The significance is machine is already 10 years old. They plan to use it for 20 years as its useful life, and so they have depreciating it for over the past 10 years with a straight line depreciation. They now said no scrap value is expected at the end of the life of the machine. But now take note, all of this is not important to us because depreciation does not involve the movement of cash. we learned about relevant cost, that depreciation is fixed cost, or depreciation does not involve outflow. It's not relevant. But see what they said here. Depreciation is recovered by including it in the variable overheads. So what it means here is this variable overhead here and this variable overhead per case already has depreciation in it. Now, the question is it supposed to be so? It's not supposed to be so, because one, depreciation is not variable in nature. But they want to recover your depreciation, they went and include it in the variable overhead. So what do? You will need to remove that depreciation that has been included in the variable cost. We need to remove it. When we remove it, we will get the pure relevant variable cost without depreciation. Then we can continue. Okay? So let's do that now. Let's do that now before we take anything. We said the machine is 10 years old, 20-year depreciation, 20-year is the useful life, the original cost is 10 million. So let's do that now. This is number 4. Variable overheads. Now say depreciation included in variable costs. Now let's look for that depreciation. Now we are told that depreciation is equal to costs minus scrap all over useful life. We are told that this costs 100 million or 100,000. Is there any scrap value? Oh, it's 100, it's 10 million. It's a good thing I checked. 10 million. Now they said scrap, no scrap value is expected. So the scrap is 0 and the useful life is 20 years. So what does that give us? We come here, 10 million divided by 20 years. This is 500,000. This is 500,000 per year. Okay? This is 500,000 per year. In this budget, they have done for 100,000 cases. So they have budgeted for 100,000 cases, and the variable cost is inclusive of that depreciation. So what do? We need to know how much is the depreciation per case. Depreciation per case will be 500,000 per year divided by 100,000 cases. So you now have 500 divided by 100,000 is 5 naira per case. This is 5 naira per case. That's first half. We will now go now to look at the variable cost here. Variable cost given is 50 naira. Original variable cost inclusive of depreciation is what? 50 naira per case. We now less the depreciation recovered, which is 5 naira. We have to remove this 5 naira. So it means that 45 naira variable cost without depreciation is 45 naira. So it is this 45 naira that we will use in our calculation. So you will come here and you will say this is 80,000, 100,000, 120,000. So this is variable cost at 45 naira. So let's see how much it's going to give us. 45 naira multiplied by 80,000. That's 3,600,000. We have 45 multiplied by 100,000 should give me 4,500,000. As against the 5 million that was given there. Then we have for 120, 45 multiplied by 120,000, 5,400,000. 5,400,000. Just a moment. All right. I'm here now. Then let's look at the question. It appears the variable cost is not finished. They said the market value of the machinery on 1st July 2016 was 6 million. Now, why are they giving us dates? 1st July 2016. Let's go up and see something here. Budget for the department ending in June 30, 2017. So it means that this budget is for the year ending June 30, 2017. It must have started from when? July 1, 2016 to what? June 30, 2017. Now, what did they quote here? They said, as at 1st July 2016, this is the start of the year. Start of the year. At the start of the year, the value of the machine is 6 million. So that means the market value is 6 million. Of course, market value and the scrap value, or the scrap value and market value will not be the same, because let's see, if they have been depreciating this thing now for over 10 years, something they bought for 10 million naira, and they have depreciated it for 10 years out of 20 years, the the debt book value would be 5 million naira, because half of the period the useful life is gone, to be 5 million naira. But they said the market value of that machine, if they are to sell it, it will be 6 million. Now they said this value would fall during the next year through use only. So it means that by the end of next year, the market value will no longer be 6 million, it's going to fall. And why is it going to fall? Because they will be using the machine. Now, at the rate of 10,000, 100 naira per 10 cases. So I'll come here, fall in machine value is 100 naira per 10 case, which is the same thing as saying 100 over 10, which is 10 naira per case. So you will now say 10 naira multiplied by, so I'm going to clean this underline I did here. I'm going to clean them up. I'll clean them up here. All right. So 10 naira multiplied by 80,000 will give me 800,000. 10 naira multiplied by 100 give me 1 million. And of course, multiplied by 120 will give me 1.2 million. Now, I'm now going to add them together. So let's start. I have 5,400,000 in my calculator. So let me treat the last one, plus 1,200,000. That gives me 6,600,000. 6,600,000. Then the next one here, this should be 5,500,000. So 6 plus 8 is 14. So that should be 4,200,000. 42, 55, 66. 42, 55, 66. 42, 55, 66. Then we have the fixed cost. The fixed cost overhead recovery rates includes occupancy costs. So they said occupancy costs and general expenses, which cannot be reduced in the year ahead. So it cannot be reduced even if Department E is closed. So what does it tell you? Whether you have 120,000 cases, the fixed cost will be the same, the occupancy cost will be the same, and general expenses will be the same at all levels. Even if you close down Department E by producing nothing, you will still incur those costs. It also includes the salary of the departmental manager at 500,000 naira per annum. He is over the retiring age, although he is prepared to continue if the department remains open. If the department remains open. So what does it mean here? Just a moment. Let me fix this. Sorry for that break in transmission. Okay, so we are told that the salary of the departmental manager is 500 naira, 500,000 naira per annum. And if this department is closed down, he's not going to get that. He's not going to get that amount. So it is relevant because that is a specific cost specific to that department. It is a specific cost to that department. If it is closed down, this cost will go. If it is not closed down, it will be paid. So we are going to be paying because we are looking at not just these 800 cases, 100,000, 80,000, 100,000, and 120. We're also looking at closing it down. So manager's salary is going to be paid. The manager's salary is prepared to continue if Department E is opened. So the manager's salary is going to be 500, 500, and 500. Now, we've jumped labor. So that means labor, nothing is talked about labor. So let's go and do labor. Labor was 100, 10 million naira at 100 or 100 naira per output of case. 100 naira per output. So let's go here and say workings number 5. So labor was not talked about. So you say number 5, labor 100 naira per output. So when we have, sorry, this is 80,000, 100,000, 120,000 in cases. So 100 naira, sure it's 100 naira. Yes, it's 100 naira. 100 naira times 80. That will give me 8 million. Then this is going to give me 10 million. This is 12 million. That's your label. 100 naira per case. All right, so let's take this down. 8, 10, 12. 8, 10, and 12. So we've done all of these. We will now close the costs. We now have our total costs here. So let's calculate. This is, let me say, 800. I'll put the negative sign before it, yes, plus 1 million or 1,600 plus 1,200 plus 8,000 plus 4,200 plus 500. That gives me 14,700. I'll have my 14,700 here. I'll go again. 1,000. I'll put a negative sign plus 2,000 plus 1,500 plus 10,000 plus 5,500 plus 500. And that gives me 18,500. Then we'll go up again. 1 million or 1,000 plus 2,400 plus 2,400 plus 12,000 plus 6,600 plus 500, 24,900. 24,900. Now that's your total cost. Then we have sales revenue. Sales revenue will be working 6. So we'll go down, down, down to do our sales revenue. Working 6. Sales revenue. Okay, so we are given, yeah, it was 250 naira, 250 naira per case. But let's see what is happening here. For this 100,000, you can see it was repeated 250 naira per case for 100,000. So for 80,000, it was 300, 120, it was 200. So let's do it now. This is the 80,000, 100,000, 120, I'll say sales revenue at, open a bracket, 200, 300, 250. Now you can see that the lower the cases, the higher the price. As the price keeps going down, the cases increase, 300, 250, 200. At 300 is to 250 is to 200. When you do it this way, it takes 300 times 80. 3 times 8 is 24. So this is 24 million. 250 times 100,000 should give me 25 million. Then 2 times 12 is 24. So that should give me 24 million. So that's it. This is the revenue 24, 25, 24. Go up again. Goes down here. So this should be 24, 25, 24. Now, your profit is going to give you revenue minus cost. So even though you put your cost first and you put your revenue under, you have to do revenue minus cost. So I'm already having 24,900 here as my total cost. Since it's going to be in the negative side, I'll put a negative to it. I'll just say plus 24. So what I mean here is 24,000 minus 24,900 give me a loss of 900,000. Then we are now saying 25,000 minus 18,500. That gives me 6,500 profits. 6,500. Then of course we have 24,000 minus 14,700. 9,300. 9,300. So now this is your required. They said prepare the flexible budget required by the MD and state clearly any assumptions you make. Show your workings. All the workings we did clearly shows our assumption. So advise the MD at what level of production the department should operate in the year to June 30th, and what decision criteria should he use if immediate closure is to be considered. So we can see here that we are not in a loss-making position to the tune of 3,600,000 or 3 million as we made before. You see, when they produce 100,000 cases, we had a loss of 3 million. But when we did relevant costing, we had a gain, profit of 6.5 million, right? If we increase our cases of production to 120,000, we are going to be making loss. But if we reduce it to 800,000 cases, we are going to get profits. So that's what we are going to use based on profits. Based on profits, that is even the contribution, because this total cost is total relevant costs. So I'm going to put it here, total relevant costs. So this total relevant cost, this sales revenue, this budgeted profit is budgeted contribution. So based on contribution analysis, the company should use 880,000 cases because they will have the highest contribution achieved. Now, this is the solution to this question. You can go through your ICANN study pack and see more reasons being given here why this solution is actually correct. Okay, so that's it. We've done our past question for these two diets. Let's see whether we can do something the remaining minutes. I wouldn't want us to leave the class. So let's see what we can do. All right, so we'll be looking at a topic called limiting factor decisions. Limiting factor decisions. Okay, so what is limiting factors? First of all, what are factors? These are factors of production. Normally, we were told that factors of production in economics is land, capital, and entrepreneurship, right? Okay. So, but now, looking at it from the performance management aspect here, it is those factors that will limit our optimal production. Those factors that will limit how much we are going to produce. Now, there are two ways we can handle limiting factors. The first one is when there is just one single limiting factor, just one, we'll use something called limiting factor decision making. But when there are more than one, we'll rely on something called linear programming. We're going to learn about linear programming later, but for now, let's look at this single limiting factor. Now, this is another decision making that we need to learn from the marginal costing. Now, problem involving more than one limiting factors said is solved using linear programming, which is beyond the scope of this topic. So we are going to be identifying those limiting factors, and we're going to carry out analysis to formulate optimal production plan. Now, this production plan will maximize our contribution, and anything that maximizes contribution will increase your profit. One of the functions of management is to make decisions on how to run the business. So decisions involve making a choice between what should be done and between different possible options of doing them. So to help managers make good decisions, they need reliable, relevant information. And so you see here, relevant cost also is here. It is often assumed in budgeting that a company can produce as many units of its product as is necessary to meet the available sales demand. So in budgeting, we need to know your market. We need to know your market demand. And so you can produce as many units to meet the market. And so sales demand is therefore the factor that sets limits on the volume of production. Now, sometimes there could be a shortage of key production resource, such as direct materials. Direct materials might be short in supply. You want to meet your market, but because your direct material is short in supply, maybe because of scarcity, you may not meet it, or you have shortage of skilled labors, machine capacity. So these are some of the examples of limiting factor. In these circumstances, the factor setting a limit to the volume of sales that you are going to produce and your profit is the availability of these scarce resources. If a company makes just one product and there is a limited supply of a key resource, this is easy. The company will just produce as much as they can using the limiting factor available. That is, if it's just one product. Let's say if it's just bread you are producing and you say there is a shortage of flour, and the remaining flour you produce as many bread as you can. That's simple common sense. But when a company makes more than one product, let's say bread and cake, and they use the same scarce resource, flour, then the budgeting problem is now to decide how many quantity of bread to make, how many quantity of cake to make, how many quantity of this mix you should make in order to maximize your profit. So you won't say, I will stop making bread and focus on cake. Or you will not say, I will stop making cake and focus on bread. No, you need to look at the blend and see which production mix will give you the biggest amount of profit given the scarce resources. Now, identifying limiting factor. A question might tell you that there is a restricted supply of a resource without telling you which of this resource is the limiting factor. So it can tell you that machine hour is the limiting factor, and you have three machines. So you don't know which of these three machines, machine A, machine B, machine C, is the limiting factor. So you must identify the limiting factor by calculating the budgeted availability of each resource and the amount of resource that is needed to meet the available sales demand. So let's see example here. A company manufactures and sells two products, X and Y. This is like saying bread and cake, which are manufactured using two different machines. Okay, the time taken to make each product together with the maximum machine time availability and contribution per unit and demand are as follows. Look at the product X and Y. Look at the machine type 1. Machine type 1 uses 10 minutes. 10 minutes in one for one unit. Now, this is like saying if you use 10 minutes for one unit, so one unit here, one unit equals to 10 minutes. So for 60 minutes, you're going to multiply by 6. It's going to give you 60 minutes. You're going to multiply by 6. So that means you are using 6 units in 1 hour. 6 units. So I'll say 6 units in 1 hour. Using that same logic, this is 10 units in 1 hour. And the available hours is 3,000 hours. Now for machine type 2, 5 minutes for one unit. So 1 unit equal to 5 minutes. 5 times 12 is 60. 60 minutes. So you multiply it by 12. So that means 12 units in 1 hour, which is also 5 units in 1 hour. Now there's a reason why we are converting to hours, because your machine availability is in hours and not in minutes. So sales demands, this you're supposed to meet 12,000 units and 15,000 units. Now we are asked which machine is the limiting factor. Now let's see, look at product X and Y, look at their sales demand, 12,000, 16,000. Now look at the hourly requirement for X. For X, you need 6 units in 1 hour, right? And if you are supposed to produce 12,000 units and you are using 6 units in 1 hour, how many hours will it take you to produce 12,000 units? So you simply say 12,000 units divided by 6 units is going to give me 2,000 hours. That's right, 2,000 hours. Then for Y, we need 15,000 units. And we are told in machine type 1, you need 6, 10 units for 1 hour. You need 10 units for 1 hour. So how many hours will you need? You will need 15 divided by 10, which is 1/5. So it means for machine type 1, you need 2,000 hours. Machine type 1 again for Y, you need 1,500 hours. When you add them together, you are getting 3,500 hours. But you need 3,000 hours. So that means this 500 hours is shortage. 3,000 hours is available, but it's not enough because you need 3,500 hours. Now, 500 hours is shortage, is scarce. Look at machine 2. Let's see whether we will have a shortage. Machine 2 still requires 12,000 units, and you are doing 12 units in 1 hour. So when you divide 12,000 by 12, you are getting 1,000 hours for X. Using the same logic for Y, you have 15,000 units, 5 units per hour. When you divide, you have 3,000 hours for Y. You add X and Y hours together, you have 4,000 hours. Available hours is 4,002. So you need 4,000 hours to do anything on machine 2. But the machine 2 hours available is 4,002. It means 200 hours will be spare capacity. You have more than enough. So this is not scarce. This is not scarce. You have spare capacity. So now this machine 1 is the limiting factor. Limiting factor is machine 1. So machine 1 is our limiting factor. Machine 2 is not the limiting factor. So limiting factor is anything that brings shortage. Shortage, when you have a shortage of the requirements, when what you have is short of what is required, then that is a limiting factor. It's just like saying that, okay, you need to supply to 100 people, but your capacity right now can only supply 90. So you are limited in supplying the whole 100 people. But if you can supply 120 people, that's your capacity, and you are asked to supply 100, then there's no limiting factor. You can do all of this. Okay, it's just like saying you are in the exam hall and it takes you 1 hour to solve one question, and you have 7 questions to solve or 5 questions to solve in 3 hours. So it means that you can only solve three. The limiting factor would be like the speed of your writing or your speed of your calculation. So it means that you need to practice and practice so that you will increase your speed so that you can solve 5 questions within 3 hours. So I've linked it now to our exams. Okay, so limiting factor is anything that gives you scarcity of what is required. Now let's go further. Steps in maximizing profit when there is a single limiting factor. Now, when there is just one limiting factor, and that limiting factor is not sales demand, so take note, when it is not sales demand, other than sales demand, the total profit will be maximized in a period by maximizing what? The total contribution earned with the available scarce resources. Now, there are steps you need to take. The first step is to calculate your contribution per unit. Sometimes in the question, you will be given contribution per unit, but sometimes they may not give you. How do you calculate your contribution per unit? You might do something like this: sales selling price minus variable cost per unit to give you contribution per unit. So if you are also given sales revenue and variable cost, total variable cost, when you minus your sales revenue, you minus your variable cost from your sales revenue, you'll be getting total contribution. Then you need to divide total contribution by the number of units produced or sold to get contribution per unit. So the first thing here is to calculate your contribution per unit. The second thing is to identify the scarce resource. You need to identify the scarce resource. Sometimes they will tell you the scarce resource, but sometimes they may not tell you the scarce resource. In the example we just did before, we were not told the scarce resource. We went to do it ourselves to identify that machine 1 is the scarce resource. How do you do that? You look at the required versus the available. If the available is more than the required, it's not a scarce resource. But if the availability is less than the required, there is scarcity. Identify the scarce resource. Then calculate the amount of scarce resources used by each type of goods produced. So now let's say you have um, materials like flour, egg, and butter, and you have identified that material flour is the scarce resource. Or let's say we say material egg is the scarce resource. Identify that scarce resource as egg. What is the amount of egg that is used to produce 1 loaf of bread? You calculate. What is the amount of egg that is used to produce 1 piece of cake? You need to know the amount of scarce resources used to produce each type of the goods. Now, you need to divide the contribution per unit that you've calculated in step 1 by the amount of scarce resources you have calculated in step 3. In other words, you say step 1 divide by step 3, you'll be getting something called contribution per unit of scarce resource. So step 1, contribution per unit. Step 2, identify the scarce resource. Step 3, identify how much of that scarce resource is used to make 1 unit of each of the goods. Step 4, divide the contribution per unit by the amount of scarce resource per unit. You are getting contribution per unit per scarce resource. Then the fifth step is to rank the goods in the order of contribution per unit per scarce resource. So you rank them on the figure you got from step 4. Then step 6 is you construct a production plan based on your ranking. Meaning that if you have cake and bread, and you rank your bread as number 1 and you rank your cake as number 2, you will need to produce and satisfy the bread market first before you satisfy the cake market. If you have 3 products, A, B, and C, and you rank B first, A second, and C third, you need to satisfy all B first before you go to A and before you go to C. And it is possible that you cannot satisfy all of B and C, or you cannot satisfy all of C. So that's it. Now look at example 2. We are told that a company sells 2 products X and Y. This is the kind of question, this is the particular question we have given before. And we are told that they are manufactured using 2 different machines. The time taken to make each product together with the maximum machine availability and contribution per unit are as given below. This is the same thing they gave us now, but they added 2 more. They added 1 thing. They gave us our contribution per unit. Now they have told us the first step. They have done the first step for us. Required. Given that machine 1 is the limiting factor, we already know that, so we don't need to go and do it again. But assuming this is an exam question, they will ask you to, first of all, A part, identify the limiting factor. Then the B part, they will tell you what is the optimal production plan. That is the production plan that maximizes annual contribution and profit that the company should adopt. Now let's do it together here. Now this is X and Y. These are 2 units, 2 products. And we were given step 1 already, contribution per unit 7 naira, 5 naira. That's fine. Now contribution per limiting factor. We are told that the limiting factor is machine 1. So we have identified machine 1. We have done step 2. So they told us step 1. They told us step 2. Step 1 was to identify contribution per unit, or calculate it. Step 2 is to identify the limiting factor we are given. Step 3 is to know the limiting factor per unit. So it means this is 6 units per hour. This is 10 units per hour. So that's what we are going to do here. Okay, per unit, sorry, not per hour, because we need to know the scarce resource per unit. So this is 10 minutes in 1 unit. This is 6 minutes in 1 unit. So that was what we did here. 10 minutes, 6 minutes. Now, what is the contribution per limiting factor? All we need to do is 7 divided by 10. That gives us 0.7 naira per minute. This is a minute. If you want to convert to hours, you can decide to say divided by 60 again. So it will give you 0.0016 per minute per hour. But let's not convert per hour. Let's leave it in per minute as it is, 0.7 per minute. Let's do the second one. 5 divided by 6 gives you 0.83 per minute. So what it means is this. If you do X 1 minute, then 1 unit, this is the contribution it gets. But because you are limited, your contribution per limiting factor, because this machine X is going to limit what you are going to do. So you are going to be going on the pace of machine X or machine 1. That machine 1 is the weakest link. They said a company is as strong, or a chain is as strong as the weakest link. Or we can say a group is as strong as the weakest person. We can say a relay, people that are running relay, they are as fast as the slowest person. So this is a limiting factor, machine 1. So everything will be decided based on the pace of machine 1, what it can carry, because the other ones can do everything that they want, but machine 1 cannot do all. So what can it do? Given this machine, what is the contribution from that machine? So this is the contribution and this is the contribution. So which one of them give you a higher contribution? It's Y. So it means that based on our scarce resource, you are going to do Y first, because it will give us a higher contribution given the limiting factor. So you will satisfy Y first before you satisfy X. So what do? This is your rank. This is the product based on ranking. So this is your first, this is your second rank, your first and second rank. So what do? You rank Y before X. So now Y demands 15,000 units. So what happened? If you are to satisfy 15,000 units, 15,000 units in machine, in product Y, how many hours are we going to use of machine 1? Look at machine 1 is the scarce resource. We are going to bring the scarce resource here. How many hours are we going to use? So let's see. We have 6 per minute, right? We have 6 per unit. Or we have how many per hour? Let's look at the one in per hour already. 10 units per hour. Okay, we have 10 units per hour. And you want to make 1,500 units. So 1,000, okay, 15,000 units is what you want to make. And you are doing 10 units in 1 hour. How many hours are you going to get? 15,000 divided by 10 is going to give me 1,500 hours. And that's this 1,500 we have here. Now, what is the original contribution? The original contribution of Y is 5 naira. So that's what we brought here. And so your total contribution will be 15,000 units multiplied by 5 naira. 5 times 5 is 25. 5 times 1, 5 plus 2, 7. That's what gives me this 75,000 contribution. It is based on your demand, sales demand, multiplied by the contribution. So you'll be asking, what is this contribution per limiting factor used for? It's only used for ranking. That's all. After ranking, you dump it. It's no longer useful. You dump it. So you only use the normal contribution you are giving. The contribution per limiting factor is just for ranking, nothing else. Now, we've done the first one. You come to the X now. Now, X demands 12,000, right? So you cannot do all the 12,000. Why? If you can do all the 12,000, that means there was no limiting factor. But because you cannot do all the 12,000, it must be limited. Now you ask yourself, how many can you do? So you can see the arrow here. The arrow is pointing forward when we are doing X, and when we are doing Y. But now it's going to be pointing backwards when we are doing X. We already know our contribution at 7 naira, it was given to us. But look at machine 1. Machine 1 has 3,000 hours available, right? Now, we have already used this 3,000 hours. We have already used 1,500 already. So that means the remaining 1,500 is what will be remaining for machine for X. So this is the first thing you do. Look for the remainder of the machine 1 hours that is required, that is available, not required, that is available. Now this 1,500 is not up to what is required, but because that is what is available, you have no choice. You have to use it. Now that you have 1,500 available, how many units can you do in 1,500 hours? Let's go and check again. X, you can produce 6 in 1 hour. If you can produce 6 in 1 hour and you have 1,500 hours and you can produce 6 in 1 hour, all you need to do is multiply by 6. This is 0, 0. 6 times 5 is 30. Write down 0, carry 3. 6 times 1, 6. Plus 3, 9. So you can do 9,000 hours. Remember how we got this 1,500? We had to do 15,000 divided by 10 per hour to get the number of hours. But when we are going back to the units, we had to do the number of units per hour multiplied by the hours to get back the units. So it means out of the 12,000 units, you can only do 9,000. And that's it. So in illustration 2, you can see that a company makes 4 products, A, B, C, and D, using the same direct labor workforce on all the products. Now, one of the hints you should take here, when they say using the same, they are telling you what the limiting factor is. Now, direct labor. So direct labor is the limiting factor. So the next thing you'll be doing is, what is the available direct labor hours? I will drop everything to look at it. To meet the sales demand in full would require 12,000 direct labor hours. This is the required. This is required. This is required. only 6,000 is available. So this is available. So this is not enough. This is not enough. So what do? We need to maximize our production. How do we do that? Look at this whole question. The first thing to do here, given this whole thing, they said the direct labor is paid 12 naira per hour. Now, why am I giving this? It is possible that your question here does not contain labor hours. It doesn't contain labor hours. You are the one to find the labor hours. They gave you the labor costs per unit. It's easy to find. Now let's look at it. Calculate the optimal production plan. I'm going to make a copy of this here so that I'll be going between. Oh, sorry. Very good. So this is going to be making this here. Now we'll be looking at making our solution here. We'll be looking at this here too. Now to meet this, now they said the first thing to do is to calculate your contribution per unit. How do we calculate our contribution per unit? You were given sales unit. Look at your sales unit here. Look at your sales unit. Now you are given selling price and you are given variable costs. You are given direct material cost and direct labor cost and fixed overhead. So this is your full cost. So what do? The only thing that is not variable here is the fixed cost. So all you need to do here is list all the variable costs. We have direct material costs, we have direct labor costs, we have variable overhead costs. When you add them together, you have 11 naira. Another way of doing it is you bring your full cost and minus your fixed cost from it. Gives you 11 naira, which is your variable cost, because your variable cost plus fixed cost will give you your full cost. So if you minus just that one fixed cost from full cost, gives you variable cost. That's another way, but you can outline them one by one, and that is the same thing I did for all. Now this is your selling price. So even though the selling price is down, your contribution, you will say selling price minus variable cost. So we are going to do one of them here, 15.5 minus 11. That gives me 4.5. That's the 4.5 here. And you do the rest for the others. That's the same thing. Contribution per unit. That's number one. Number two, you have identified the limiting factor. And we said the limiting factor is what? Labor hours. So we have identified the labor hours as our limiting factor. So the next thing to do is, what is the labor hour per unit? You were not given. You were not given. Labor hours per unit was not given here. What we have is direct labor cost per unit, and we have labor labor cost per per hour. So, but what can we do? Now look at it. Direct labor cost per unit. So it tells me that for 1 unit, you are spending 6 naira for 1 unit, right? For 1 unit here, you are spending 12 naira, 3 naira, 9 naira. Just 1 unit. This is how much you are spending. How much did you spend for 1 unit? 6 naira. How much did you spend in 1 hour? You spend 12 naira per hour, constant in all of them. And so what it means is that if you are giving 6 naira per unit and you are spending 12 naira per hour, then when you cancel year 1, cancel year 2 is 0.5 hours. It means that you were using 0.5 hours, which is like 30 minutes. That is why if you are paying 12 naira for 1 hour, 30 minutes you would have spent 6 naira. That's the reason why you spent 6 naira, because it was 30 minutes per unit. Now, you spent 12 naira per hour and you spent 12 naira for that product. That means the product was done using 1 hour. You are paying 12 naira, a rate of 12 naira per hour, but in product C, you end up spending 3 naira. What it means is that the person did not spend up to 1 hour, otherwise, he would have gotten 12 naira. He didn't spend up to 30 minutes, he spent 15 minutes in doing one product, which is 0.25. Then here, you end up spending 9 naira. That means the person spent um, 45 minutes. 45 minutes in this product. So after doing this is your limiting factor per unit. Is 30 minutes for 1 unit, 1 hour for 1 unit, 15 minutes for 1 unit, 45 minutes for 1 unit. Now you need to do your contribution per limiting factor. So what that means is this: you have your contribution per unit here. Let's do it here. Contribution per unit is 45 to 4.5, which is this, divided by limiting factor per hour, which is 0.5, which is this. So when you do that, 4.5 is here, divided by 0.5. That gives me 9. That's the 9 that we have here. That's the same method you can employ here. You can say 7 divided by 1. That gives me 7. So that's the way you employ the others. Now you rank after getting everything you rank. Which one of them gives you the highest contribution? This is the first, this is the second, this is the third, and this is the fourth. After that, you dump your limiting factor. After that, you dump all of these. Then you go to your ranking: first, second, third, and fourth. So your first is D, second B, third A, fourth B. After leveling it that way, you go to their sales unit. What is their sales unit here? It is this sales unit. So 4,000, 8,000, 4,000, 5,000. Of course, B and A have been severely limited, but we'll come to it. So what happened here? If you are to produce D first, you need to satisfy all of these markets. We have 4,000 units. How many hours is he going to use? So all we did here is 4,000 units. So you say 4,000 multiplied by how many hours is going to use here? How many hours per unit? This is the hours per unit here for D, 0.75. So what we did here, we say 4,000 times 0.75. That's what gave me that 3,000 here. That's what we did here, 3,000. And this is the labor hours we are going to use. But we are going to multiply 4,000 times our normal contribution here that was given to us, our normal contribution per unit, which we calculated here, 9 naira. That's it. So you bring all this contribution according to the product, you arrange them down. So 4 times 9 is 36,000. That goes. The next one is C, and now C is asking you for what is the number of units for C? 8,000. You are asking yourself now, can it go? You already have 3,000 units here, so 3,000 labor hours, as against the 6,000 that we say is available. So what it means is that 6,000, 3,000 has gone, 3,000 is remaining. If you are to satisfy the whole of 8,000, can you satisfy them all? Okay, so let's see. You will say 8,000 multiplied by how much units? How many hours per unit? 0.25. So let's see whether this answer will be more than 3,000. 8,000 times 0.25 is 2,000. It's less than 3,000. So you can satisfy it, all of it. So you take all of it. It's going to the forward direction. 8 times 2.5 is 20,000. So this 2.5 is the original contribution per unit we have here, which is this 2.5 multiplied by 8,000. It gives you this. Now you go to A. A is asking you to do how many? 4,000. And so you first of all try. If 4,000 can go, you simply say 4,000. Remember, we've done 3,000 and 2,000, which is 5,000. You are left with 1,000 remaining. Can it be used to satisfy all of A? Let's see. 4,000 multiplied by, look at A, 0.5. 0.5 times 4,000 will give you 2,000. So you see, 2,000 is what is needed to satisfy everything. So you cannot do everything. So you now need to go back. How many can you do? So you simply say, we have the remaining 1,000, which must be used in A because A needed 2,000. So you have to use the whole 1,000 in A. But if you are going back, 1,000 hours is required to do part of A. And if A takes 0.5 hours, what it now means is that 1,000 divided by 0.5, meaning you can only do 2,000 units. That's how we end up doing 2,000 units of A instead of 4. And we look at the contribution per unit of A, which is 4.5. We multiply 2,000 by 4.5 gives us 9. Now, if you count everything here, 3,000, 2,000, 1,000, our 6,000 has reached. So that means we cannot do B. No hour is remaining for B. And even though B is, we need how many? We need 5,000. We cannot do B. So the sales quantity for B will be 0. Cannot satisfy B at all because the lowest ranking. So that saves you enough time. It saves you energy to go and set up for B so that you don't waste time setting up for B. wey you will end up not doing. You don't waste time setting up for A, for everything in A, when you are going to do half. So you concentrate on doing D first, followed by C, because those ones will give you more profit, followed by C. Then you do A, then not you not do B at all. And look at the highest contribution you are going to make if you are to use this format, this directive. So that's your limiting factor. So I would like you to look at example example 7 on this here. Now is your assignment. This is your assignment. This is your assignment. Now I would like you to do this assignment and submit before the end of for the next class. And let's see if we have another assignment that will require limiting factor from our past question. So limiting factor, let's see. There is no question. Okay, good. There is another limiting factor here. So this is another assignment. Assignment, because it's on A2, assignment here. Then there is another limiting factor. Okay, we've done this relevant course. Let me take note of it that we've done this relevant course. So done that. Let's see another limiting factor. Yes, we have another one here. Limiting factor. Then we have another limiting factor. All these are just for you to try. Another one here. We will not take everything in class. The next class we may just solve one. This is another limiting factor. I need to be calling them, okay, assignment 1, this assignment 2. Let me call all of them assignment 2. Let me call all of them assignment 2. Okay, so I'm identifying areas where we have limiting factor so that you can see that limiting factor is something that was used in the past previous 10 diets, the previous 5 years before this last 5 years. So we have 1, 2, 3, 4, 5 past questions, including my 6 to solve and practice. So we'll decide which one to take in correction in addition to the notes we've given. Solve that one and one of these, and that will be all for our class on Monday. But if we have time, we can solve more so that we can familiarize yourself, because limiting factor is a very key concept that will be tested in your examination. If you have any question, you need to send those questions to my WhatsApp so that we can discuss about it. Thank you so much for coming to class, and I will send the recording to you when it is available.